Don't mess this up. Right now, we're facing one of the most uncertain and volatile moments in the markets, and understanding what's happening could save you from serious losses or set you up for the opportunity of a lifetime. The Fed spoke just a few days ago, and the reaction has been sharp. Markets are falling. Fear is creeping back in. And the cause? A single word: stagflation. That's the economic condition where inflation is high, growth slows, and unemployment rises, all at once. It's rare, and it's hard to fix. Raise rates to fight inflation, you hurt jobs, try to grow the economy, you stoke more inflation. So now, uncertainty is back on the table, and markets hate uncertainty. To make things even more complicated, Donald Trump has publicly gone after Jerome Powell, suggesting he should be fired over poor policy. That adds another layer of chaos: the independence of the Fed under pressure, rate cuts on the line, and political tension rising. Meanwhile, Trump is still optimistic about a deal with China. After slapping on a 145% tariff, Beijing is engaging in negotiations, and there's talk that progress is being made. If tariffs ease, that could be a massive shift for risk assets. But until we get clarity, this cloud of uncertainty continues to hang over everything. Now let's look at the charts. The S&P 500 had bounced off its lows, but is now pulling back again. We just saw a death cross, a bearish technical signal, and historically this has meant more downside. In similar setups, we've seen 15% to 24% drops follow. If that repeats, the market could revisit levels not seen since May 2023. Bitcoin? So far, it's holding. But if history is any guide, a further correction could take us as low as $49,000, right at the key consolidation level from the last breakout. I'm not saying that happens for sure, but I am mentally prepared if it does. That's how I stay ready. Buy in tranches. No panic. When the market hits these sharp drops, retail is usually betting the wrong way. That's when you see the wicks, long, volatile moves where everyone gets shaken out. Right now, the liquidation heat map shows billions in both long and short positions. But shorts have piled in more heavily, with nearly $100 billion in positions ready to be liquidated around $94,000. That's one reason why we're seeing price just range between $83,000 and $86,000. 7 days of chop designed to shake out both sides. Most traders use too much leverage. They get wiped out in 3% swings. That's why I stick to low leverage, small size, and focus on protecting capital. If you're here to trade smart, not fast, make sure you're subscribed. Now, bigger picture, Trump wants to cut rates and refinance debt. But the tariffs and Fed comments have pushed yields higher. That makes debt more expensive and delays the plan. If rates rise further, things could spiral. But here's the twist. Trump could drop those tariffs at any moment and instantly flip the script. So, we wait. We stay patient. And when the moment comes, we're ready. Smash that like, subscribe, and turn on notifications so you don't miss the next move. Peace.